Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at Coin, or Coinbase Global Inc. Coin is the largest U.S. cryptocurrency exchange, trading some 50 different digital assets. Here's the barchart.com technical opinion rating. The barchart.com technical opinion rating is a 100% buy, with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that Coin is well above the moving average line, so the monthly trend in Coin is up. Next, we're going to look at a daily chart. According to Prime Trade Select rules, on a daily basis, we want the 50-period or 50-day exponential moving average, the blue line, to be above the 100-day exponential moving average, the green line. As you can see, the blue line has been above the green line since at least November, so the daily trend in Coin is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. The Coin stock price is below the upper Keltner channel line, so Coin is inside the buy zone. Here's the list of option chains for Coin. That's one of the longest lists I've ever seen. Anyhow, there are plenty of choices. We're going to use the April 19 option chain. Right now, the April 19 options have 19 days to expiration. Here's part of the option chain for Coinbase. Coinbase closed at 265.12 on Friday. That means any calls on the list from 200 to 265 are in the money. Let's take a look at the profit potential for purchasing the 265 strike call, which is the closest strike to the current price of the stock. Our call option calculator shows the profit potential for this call based on price changes from 0% flat to 12.5% increase. We can see that if the Coin stock price is flat at 265.12 at option expiration, the 265 call will lose 99.5% of its value. We want that to be break even or better, so the 265 call does not meet our requirements. We developed what we call the 1% rule to help us avoid this kind of risk. Definitely don't want to risk 100%. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 232.5 strike call to see if it qualifies for the 1% rule. Here is the call option calculator picture for the 232.5 strike call. We can see that if the Coin stock price is up 1% at expiration, the 232.5 call will lose 14.6% of its value. We want that to be break even or better, so the 232.5 strike call does not meet our requirements. Let's see if the 200 call will work. The bid-ask spread for the 200 call is 66.70 to 68.75. We try to enter at the midpoint, so we'll use 67.70 as the buy price. Our call option calculator shows the profit potential for this call based on price changes from 0% to 12.5% at option expiration. The call option calculator picture shows that if the 200 call is up 1% at expiration, it will make a 0.1% or $7 profit. That's better than break even, so the 200 call is the one we'll buy. The call option calculator also shows that if the Coin stock price increases by 2.5%, Coin will make the option will gain 6% or $405. If the Coin stock price is up 5%, the 200 call will make a 15.8% or $1,068 profit. If the coin stock price is up 7.5%, the coin stock price will make a 25.6% or $1,730 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the Coinbase stock price remains flat at expiration, the 200 call would only lose minus 3.8% or minus $258 compared to the minus 995, or I'm sorry, compared to the minus 99.5% or minus $2,273 loss for the 265 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the coin April 19 expiration 225 strike call and sell to open the coin April 19 expiration 235 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 225 call for $47.45 and sell the 235 call for $40.20. The call option spread analysis calculator picture shows that the spread will make a 37.9% or $275 profit if the coin stock price increases by 7.5%, remains flat, or declines by 7.5% at expiration. As we know from the previous slide, creating the debit spread, selling the 235 call, will allow us to collect a $4,020 cash credit to our brokerage account for the sale of the 235 call. And the cost for this spread is $725, as we said, leaving profit potential of $275. Here's a note regarding earnings reports. The next coin earnings report is scheduled for May 2nd. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the coin, COIN, April 19, 200 strike call for $67.70. We also reviewed a spread. The spread said to buy to open the coin April 19 expiration 225 strike call and sell to open the coin April 19 expiration 235 strike call at a debit of $725. That's it for this week's Option Earning Workshop. Thank you for joining us. We look forward to seeing you again next week.